Advanced Technical Analysis Strategies for Intermediate Traders. Introduction. As intermediate traders, it is crucial to expand your technical analysis skills beyond the basics. Advanced technical analysis strategies offer a deeper understanding of market dynamics and can help you make more accurate trading decisions. In this text, we will explore advanced technical analysis strategies specifically designed for intermediate traders, providing you with the knowledge and tools to enhance your trading proficiency. Fibonacci Analysis. Fibonacci analysis is based on the mathematical sequence discovered by Leonardo Fibonacci. This strategy involves identifying key retracement and extension levels to determine potential support and resistance zones. By combining Fibonacci levels with other technical indicators, such as trend lines or moving averages, traders can anticipate price reversals and trend continuations. Advanced chart patterns. Building on the basic chart patterns, intermediate traders should master more complex patterns like the head and shoulders, double top and double bottom, and wedge patterns. These patterns offer valuable insights into market sentiment and potential trend reversals or continuations. By understanding the implications of these patterns, traders can make more informed trading decisions. Multiple time frame analysis. Multiple time frame analysis involves analyzing price action across different time frames to gain a comprehensive view of the market. By examining long-term, intermediate-term, and short-term charts, traders can identify trends, key support and resistance levels, and potential trading opportunities. Higher time frames provide a broader context, while lower time frames offer precise entry and exit points. Oscillators and momentum indicators. Intermediate traders should become proficient in using oscillators and momentum indicators to gauge the strength and momentum of price movements. Indicators such as the Relative Strength Index, RSI, Stochastic Oscillator, and Moving Average Convergence Divergence, MACD, can help identify overbought and oversold conditions, as well as potential divergent signals. Combining multiple indicators can provide more robust trade signals. Volume analysis. Volume analysis focuses on understanding the volume of trades occurring in the market. Analyzing volume patterns can provide insights into the strength of price movements and potential trend reversals. By combining volume analysis with other technical tools, such as trend lines or moving averages, traders can confirm the validity of their trading signals. Advanced candlestick analysis. Expanding your knowledge of candlestick patterns beyond the basic formations is essential for intermediate traders. Advanced candlestick patterns like the three black crows, evening doji star, and bullish abandoned baby can provide valuable insights into market sentiment and potential trend reversals. Combining candlestick patterns with other technical indicators can enhance the accuracy of trade signals. Advanced trend analysis. Identifying and trading trend continuation patterns, such as flags, pennants, and rectangles, can be highly profitable for intermediate traders. These patterns indicate periods of consolidation within an existing trend and offer opportunities for entering trades with favorable risk-reward ratios. Using indicators like the Average Directional Index, ADX, can help determine the strength of a trend and spot potential trend reversals. Risk management and trade execution. Implementing advanced risk management techniques is crucial for intermediate traders. This includes determining appropriate position sizing, setting stop-loss orders, and managing trade exits. Moreover, advanced trade execution strategies, such as using limit orders or scaling in and out of positions, can optimize trade entries and exits. Conclusion. Advanced technical analysis strategies provide intermediate traders with the tools and knowledge to analyze markets more effectively and improve their trading results. By mastering Fibonacci analysis, advanced chart patterns, multiple time frame analysis, oscillators, volume analysis, advanced candlestick analysis, advanced trend analysis, and applying proper risk management techniques, traders can enhance their trading proficiency and make more accurate trading decisions. Continuous practice and experience are key to refining these strategies and achieving consistent success as an intermediate trader in the Forex market.